Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, January the 20th, 2010. Well, a very large red body candle today, and that's quite a change of character for this market. We haven't seen this type of trading over the previous week or so, and there is potential for this market to continue trading down to possibly around the 1080 region. Very large red body means that the sellers have made some very solid net bearish progress on the day. The bears have closed the market in control, and they've shown some fairly strong commitment to taking this market lower. Now, yesterday we also identified that we had the market trading within a symmetrical triangle, and here we have the upper boundary and the lower boundary, and today we've had the breakout to the downside. Quite a significant breakout. We have a solid bearish close, so that pattern is complete, and we should expect the pattern to trade to the downside with a target the distance between the greatest width of the boundaries of the pattern, so down around probably down around this 1080 region. Having said that, though, we do need to be aware that the market is potentially finding some support at the bottom of the cloud or the Kumo, so any trading action down below here will have the potential for the market to trade down towards the target. But we notice that we have a little shadow on the bottom of this candle that represented some buying coming in as the market tried to trade to the bottom of that cloud. So not a lot of buying, but may be significant for this market. Now, for this market to continue down towards the target, we should keep an eye on the low of the current candle and look for a potential bearish close down below the cloud here. Bearing in mind, though, that quite often when we have markets breaking out of a flat cloud, then there is potential for that to be a false breakout. So what we'd like to see is a very solidly bearish close down below there. There is potential for the market to continue trading back up to the top of the cloud, and that's because the market is trading within the cloud or the Kumo. So in Ichimoku charts terms, this is a fairly neutral market, not a bearish market at the moment. If the market does break out to the downside below the cloud, then the market would be fairly bearish, but we haven't had that yet, so we just need to wait and see how the market reacts to the cloud where it's trading at the moment. The market is trading down below both the Tenkan-sen and Kijun-sen, which is bearish, but overall we are trading within the cloud, and the market is neutral, so we need to bear that in mind. And the Tenkan-sen is below the Kijun-sen, so that gives us a bearish indication as well, but only a fairly not a very strong bearish indication too. If the market does trading out down below the cloud, then we do have that support area down around the 1080 level, and then support down around the 1029 and 1000 level. So there is potential for the market to, if it does break the 1080 level, to trade substantially lower. So I think we need to watch this market over the next day, look at how it develops, look at the short-term dynamics, and bears should be looking for a solid bearish close.